Morning, everyone. I'm Kristen Myers, editor-in-chief of ETF.com, here with your market minute for Friday, May 30th. So we have two things that are moving markets right now. One is going to be the U.S. China trade war, and the second is actually going to be inflation. So let's quickly start with what's happening between the United States and China. As you might remember, the two countries did reach a temporary agreement that lowered tariffs to 10%. 30% in the case of China. However, earlier this morning, President Trump shared this on Truth Social. He said that a fast deal was made with China, but that, quote, the bad news is that China, perhaps not surprisingly to some, has totally violated its agreement with us. So much for being Mr. Nice Guy. Now that, of course, is going to cause concerns to investors and to markets that perhaps this deal might fall apart and that we might see these really large tariffs back and forth between the two countries again. Looking at inflation, we also had a piece of economic data, the PCE, that's a personal consumption expenditures index. And what we actually saw was that inflation eased a bit and slowed. On an annual basis, we currently have inflation, or PCE, rising 2.1%. Now that is down from 2.3% the month prior, and that is also very close to the Fed's preferred inflation goal, which is 2%. So we're pretty much getting bang in line with where the Fed actually wants inflation to be, which is pretty good news. So let's take a very quick look at some ETFs right now. So XLI, that's the Industrial Select Sector Spider Fund. It is obviously all about manufacturing and industrials. It is in the green today, up over 1/10 of a percentage point. Then we, however, have MADE, the iShares U.S Manufacturing ETF. It is down almost 1/2 of a percentage point. So industrials are doing well, but manufacturing is not today. Broad markets, if we take a look at SPY, it is in the red, however, hovering close to flatline. Then taking a look at DIA, it is in the green today, up over 1/10 of a percentage point. Now, we've actually have a little bit of profit taking when it comes to the tech sector. Just yesterday, we had NVIDIA report earnings, and it did report beats and gave investors optimism when it came to tech, particularly when it came to AI and cloud computing. However, MAGS, that's the Round Hill Magnificent 7 ETF, it is in the red, down 1/4 of a percentage point, while QQQ, the Invesco QQQ Trust, which very closely mirrors the tech-heavy NASDAQ, is also in the red, down over 1/10 of a percentage point. As always, make sure to subscribe, like, and follow ETF.com as we keep you updated on all things that are happening in the markets and how it's going to impact your investor portfolio.